Hi guys, so welcome back to my YouTube channel. Today I'm doing an analysis on USD Canadian dollars, right? So this pair on a longer term I'm buying. I'm buying this pair on a longer term, but on a shorter term I'm selling. That's like short term, just for today I'll be selling. So this is the reason why I'm buying on a longer term. There's an fair value gap from here. This is a fair value gap right here. This is a weekly time frame, by the way. So I look at weekly time frames, see the overview. So as you can see, last week was bearish, and as you can see, it's making higher lows. If you put your trend line here, you see higher highs, higher lows, higher highs, and this is a higher low in line with our fair value gap. So I expect the market to cover this fair value gap. So what else would I do? I went to my one day time frame. I'm going to my one day time frame. Can you see yesterday was Monday, right? First day of the week. It ended with a pin bar. So everything on this time frame is it took one day for each candlestick to form. So as you can see, like yesterday was a pin bar, right? That's in line with our a pin bar is a hammer, is a signal that buyers are in the market, in the sense that buyers have taken control of the seller's market. So I still went to my 4 hours. But on my 4 hours, I noticed that there's a little fair value gap. Let me zoom in so you guys can all see. Can you see this green bar from this place where this my line is to this point? There's a fair value gap here. Let me even copy it so you all will see it. Let me copy it to this point. So basically from here to here, that's where the fair value gap is. Where's that arrow? I'm trying to put an arrow so you all will see what I'm saying. Right? Text. Okay. So this area here is where the fair value gap is. And as you can see, it's like telling me that it's for it to cover here, the market needs to sell for it to cover the fair value gap. And this is 4 hours time frame. So I still go down to my 1 hour time frame because that's where I make my entries 1 hour 15 minutes. So looking at this now, look, this is a pattern here. What does it look like? It looks like M. It looks like an M shape, as you can see. And the fair value gap is in correlation with our 4 hours because these lines are based on my 4 hours. Now this is my 1 hour chart, and this is what I'm trying to cover, right? So I'm selling. As you can see, I can see a little bit of rejection. I just put my stop loss above here. That's like 1 to risk reward ratio 1 to 1. But I'm so certain that to cover it, this United States dollars versus against Canadian dollars. So I'm automatically selling United States dollars to buy Canadian dollars. So this is it. Would it enter? I don't know. It's a game of probability, but I have confluence. Like I have three confirmations. My first confirmation why I'm selling is from my 4 hours, and this is it. Let's go. Let's count the confirmations why I am selling. Fair value gap. There is a fair value gap here, as you can see. Look at this rejection, this bearish candlestick, the red one. I'm not going only with that, right? But looking at scaling down to 1 hour, I've gotten first confirmation on 4 hours. 1 hour also have a fair value gap in correlation with our 4 hours time frame. I can see a chart pattern. A pattern, depending on your strategy, I also use patterns. To trade for confirmation. I can see a double top, which is an M pattern, and I can see an engulfing here afterwards. Like this bearish bar is a full force of sellers entering the market. That's bears entering the market, and as you can see, this is an M, right? It's trying to form the right shoulder of the M. So I'm going with this because I have more than or up to three confirmations. Fair value gap on 4 hours, fair value gap on 1 hour, pattern, double top pattern, and I also have full force of an engulfing bar. This is an engulfing bar. So let's see what happens for my USD Canadian dollars. Now let's go to my USD Japanese yen.